Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq. Today we are discussing the real impact of no round lots. Phil, there's been a lot of discussion about the odd lot problem in U.S. markets, especially as odd lots have been increasing. On a high level, what is the problem with odd lots?
Yeah, I mean, I think on a high level, we're kind of going to wind back about 20 years to when humans were doing trading. And so nobody really wanted to be settling lots and lots of trades for single shares and 3 shares and 53 shares. So we have this concept of a round lot in America where only trades of 100 shares counted for the marketplace, for bids and offers to be public. And as the market automated, we started to see a lot of companies stop doing stock splits. And so 2 things have happened. We've got this rule in place that says unless you have an order of 100 shares or more, your order doesn't really count for things like price discovery or advertising. And then you've got company prices drifting up unsplit, which means nowadays, if you want to trade 100 shares of a stock like Amazon, it's over $300,000. It's way more than your typical average trade size, which is less than $10,000. And so people have kind of adjusted to that by saying, you know what, I just have to use odd lots anyway, which means I will send in my 5 shares or 8 shares or 93 shares and just trade it that way. And the computers don't care, but for the marketplace, when you're looking at your television screen or when you're looking at your trading screen, you're actually not seeing those inside odd lot quotes. You're seeing the best 100 share order on the bid and the offer.
So what if we eliminated round lots altogether?
Yeah, so that's what we're looking at today. And it's an interesting proposal, right? Because there's a lot of people that think it's nice to have the 100 share round lot because at least that way there'll be enough liquidity at the MBBO, at the bid and the offer for any trade to complete. But when we start to look at the data, what we see is actually it affects a lot less stocks than we think if we started to look at quotes for single share orders. And so what you see is there's an awful lot of volume. Around about 70% of the shares that trade what we call tick constrained. So they're already less than 2 cent tick wide, which means if an odd lot comes in, it basically joins the same bid and offer as all of the round lots. So it doesn't really matter. And so that's important because if it doesn't matter for 70% of the volume, then we can kind of take that away and say those stocks really aren't going to see any difference from this rule change. Where the difference might come in is the stocks that have multiple tick wide spreads where currently you might have a spread that's 50 cents wide. And so every 50th of a cent in between might have smaller orders in it. And potentially those orders might get a bit too small for filling the average trade size.
If we take a look at the Nasdaq order book, does it confirm these theories?
Yeah, so that's where it gets interesting because actually when you take a look at the Nasdaq order book, you see that even just looking at our order book, there is plenty of depth if we count odd lots for quotes. Even in the very high price stocks with lots of tick levels in between the current bid and offer, the average amount of value that's exposed in those odd lots is plenty. It's about $20,000 for stocks between $100 and $250. It actually goes up as the stock prices rise, even though the spreads on those stocks typically get wider. And so most of the time, even the Nasdaq book would have enough odd lot depth at the real inside to fill all of those small orders, which basically means that there's a lot less risk to a small order if the actual market's bid and offer price represented the tightest, smallest trade available.
So it sounds like treating all lots the same way makes less difference than we may think.
Yeah, I think people fear moving from the 100 share round lot to a single share quote representation because maybe 1 share of Amazon on the bid for $3,600 odd is all that will be there. But the reality is that's rarely the case. And people need to trade more value than that. And so they put their full order in for their $8,000, $9,000, $10,000 worth of trades. That would create tighter spreads. It would create a much more transparent market, arguably, and it would make costs go down for investors too.
So at the end of the day, it sounds like all lots should be treated the same.
I think it's something we need to do a little bit more investigation in, but it's not nearly as, I guess, as scary a concept as a lot of people think. And the reality is most of the developed markets around the world have been trading in integer shares or single share lots for a long time. And a lot of emerging markets do too. So we certainly wouldn't be the first country to do it.
All right, Phil, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.